Hey guys, it's 420 Traded. We don't blaze it, we just trade it. Now, today I'm here to talk about Harvest Health and Recreation. Now, if you don't know, Harvest Health and Recreation is a US MSO cannabis operator. Now, yesterday they were halted in the morning and they received very good news actually. So, let's get into this article, shall we? So, on March 11, 2019, Harvest Health and Recreation, a vertically integrated cannabis company with one of the largest footprints in the US, is pleased to announce that it has entered into a binding agreement to acquire Verano Holdings, an arm's length third party, one of the largest privately held multi state, vertically integrated licensed operator of cannabis facilities, in an all stock transition for an estimated purchase price of approximately 850 million US dollars, based on a share price of $8.79 Canadian. The combined company will be one of the largest multi-state operators MSO in the US, as measured by licenses held and facilities permitted upon completion of the transaction and regulatory approval. Harvest will hold licenses that will allow it to operate up to 200 facilities in 16 states and territories across the country, including 123 retail dispensaries. Harvest's planned acquisition of Verano will include licenses and operations in 11 states and territories, including 7 cultivation licenses, 37 retail licenses, and potential to reach 150 million plus Americans. That's pretty huge, guys. Like this acquisition will honestly make Harvest like one of the best and biggest MSOs. Like they were like on my watch list and now they became one of my favorites. Like I was looking at GTII, which is Green Thumbs Industry, also True Leaf Cannabis, Curaleaf, Acreage Holdings, Ianthus, Cresco Labs, but this is actually one of my watch lists, and I did buy the dip before the news halt, so I'm very gassed about that. I really like this company. The fact that they're acquiring this big private um MSO is just it's a game changer for them. Like all eyes are on them now. So they're also vertically integrated cash flow positive operations. Proven executive team with retail, manufacturing, branding, and logistics and operational experience and 300 employees, hiring for approximately 300 new positions in 2019 with a focus on hiring minorities, women, and veterans. Game-changing ethanol extraction technology at pharmaceutical grade levels, providing new market opportunities for cannabis, biotech, food, and beverage verticals. Portfolio of premium proprietary brands with 150 plus products SKUs sold in 150 plus retail locations. Total cultivation expansion capacity of 900,000 square foot in Illinois, Nevada, and Maryland. That's a huge capacity, like expansion capacity. Like they can grow a lot of weed, they can sell a lot of weed, especially in the US market. So yeah, this is gonna add a lot of revenue, bigger profit margins, and like EBITDA positive, which is really important in this industry, important in everything. And yeah, I really believe, like to be honest, I'm making a wild guess, but if the states federally legalizes recreational marijuana, right? I feel like canopy growth with that like remaining $4 billion that they have, they might buy out Harvest Health, like in my opinion. But it is a wild guess, but we can all go back to this video and see if I'm right once they do legalize marijuana in the states. So they also have an ownership of interests in 9 Zenleaf dispensaries of average annual revenues 2.5 times higher than retail cannabis industry averages. Okay, that's pretty huge. If they have a higher like average than like the other retail cannabis industries, then that's more profit, more revenue. Like you can't go wrong with that. following completion of the transaction, the combined company is expected to be operating 30 dispensaries, 8 cultivation facilities, and 7 manufacturing facilities, with expected further aggressive operational expansion by the end of 2019. Harvest expects to have over 70 dispensaries, 13 cultivation facilities, and 13 manufacturing facilities in operation. The company expects to continue growth in 2020. Now, in 2020, that might be the year that marijuana would be legalized, so that would be a huge, huge catalyst. And I could see the stock running up like crazy, just like how Canadian MJ names had that crazy run up to legalization. We could see the same, and if not, a bigger run up in the US because it is a bigger and huge market opportunity for everyone. So yeah, keep an eye out for US MSOs, especially for Harvest Health. And yeah, I'm not gonna get into all of this. You can read it yourself if you want to do your own due diligence on them. And yeah, since they are like diluting their shares, like they're paying for the acquisition using their shares, they are diluting their share count, but it's okay because they are like positioning themselves to be a bigger global um like player, you know? So that's why I believe Harvest Health has like huge potential with its acquisition. It's really, really like amazing that they just went from like a semi-huge like MSO to like the biggest right now. So let's take a look at this interview with the CEO of Harvest Health, Steve White. Now, if I can get this to play.
Shares of Harvest Health soaring after the biggest U.S. pot deal to date, making the biggest U.S. pot deal to date. The cannabis retailer will acquire Verano Holdings for $850 million. The combined company would become one of the biggest multi-state operators in the country. For more on what this deal is signaling for the rest of the cannabis space, Harvest founder and CEO Steve White joins us from Phoenix. Steve, great to see you again.
Likewise, good to see you.
So with this acquisition, you're getting cultivation licenses, you're getting retail licenses. Obviously, your footprint gets a lot bigger. Can you speak to us about sort of the land grab that's happening right now within the cannabis space, particularly before banking opens up to the entire industry?
Sure. Obviously, the industry is very fast growing. Presently, we're in a phase that people are referring to as a land grab. For Harvest, what we've told people that we plan on doing is developing the largest retail footprint, the largest retail platform in the United States. And with this acquisition, I think we've done that.
In terms of the advantage that you might have right now, though, and I know that we've spoken about this in the past, Steve, that is that for companies who have the ability to do transactions without any banking, this is really helpful right now. I mean, in terms of you being able to go out before everybody else can have access to banking, to borrowing, to issuing debt, et cetera.
Yeah, I mean, it's one of the reasons we went public was to allow us the ability to make acquisitions like the acquisition that we announced this morning, because we don't have traditional debt financing that you would find if we had normalized banking in the cannabis industry.
How many more deals do you have up your sleeve, Steve?
That's a great question.
I knew I'd finally get a chuckle out of you and a smile, Steve. So
yeah, we have suffice to say we have a lot of them. Our M&A team is very active, and we're going to do every single deal that makes sense for Harvest and Harvest shareholders. For us, we think it's really important to grow faster than our competitors, and so we're going to do everything that we possibly can in order to deliver on that.
Is this a race against time in some sense, Steve?
In some sense it is. I mean, we're at a unique point in time where there are a limited number of licenses available. There are a limited number of access points into the U.S. market. So we want to accumulate as many of those access points as we possibly can to execute the strategy to ultimately roll out our brands across that retail footprint and across the nation.
Karen here has got some questions about the structure of this announcement, Steve.
Yeah, hi, Mr. White. The question is, in the announcement it said arm's length transaction, and I was wondering, is there some overlap between Harvest holders and Verano, or it was very specific language? Why do you have that phrase in there?
Yeah, that's a great question. Actually, that phrase was added after a regulatory review, and a regulator required that we add that language to the actual press release. So, apologize for the wonkiness. There aren't any related parties between Verano and Harvest, but that was something specifically that we were asked to add.
Thank you.
Hey, Steve, it's Tim. Congrats on this deal. Certainly a guy that said he's going to go out and do things, and you guys continue to do that. What's most impressive about Harvest to me is how efficiently you've used capital to this point. You've been able to acquire assets, acquire licenses at a fraction of what your competitors. Verano's cash flow positive. Talk about this being a different story than other players who don't have that profile.
Yeah, Tim, it's a great question. One of the things that we have been really good at is acquiring licenses when they're actually allocated by the government, which means that we don't have to go out and buy them later for tens of millions of dollars when we can acquire them for a few $100,000. What we've seen in Verano is they also have the ability to do that very same thing. What very few people know is they won more licenses than anyone in the state of Nevada in the recent round of license awards there. It's also true that we have had an emphasis on profitability from the very beginning of our formation. And when we started talking to Verano, we got the very clear sense that they are like-minded in that respect. And so they have been running a profitable company for quite some time as well, which, as you know, in the U.S. cannabis industry is quite unique. There's only a few companies that actually run profitably. So in this case, you've just combined two of them. So there's one less.
To that end, Steve, not every license, I would imagine, means profitability for you. So how do you select which areas of the country look like they are much more promising in terms of profitability, and which areas of the country just don't make any sense for you?
So it's becoming closer and closer to time where they almost all make sense. But for for quite a period of time, we didn't have a lot of access to capital. So we had to carefully look at whether or not a particular jurisdiction allowed us a path to profitability. If we could not find or we could not identify that path to profitability, we had to pass on it. And so we've become very good at determining how a state is set up and what implications there are going to be for the eventual profitability of that license. For example, do they have all the right qualifying conditions? Do they allow all of the products to be sold to people? All those sorts of things feed into our analysis of whether or not a license is going to ultimately be a profitable one.
All right. Well, Steve, thanks so much for joining us and sharing with us the news of the deal. We hope you'll keep us posted. Steve White, the CEO and co-founder of Harvest Health. Grasso.
I think that all these companies, as Steve said, are going to be on an acquisition hunt, and they're going to gobble up a lot of the smaller players.
Now, what Steve White said during the interview is that he has many more deals to come, and he's gonna have an aggressive and fast M&A, which stands for merger and acquisitions, if you don't already know. So this company actually reminds me of ACB because they are trying to become the biggest U.S. cannabis company with their aggressive M&A, just like how ACB did by diluting their shares. And since Harvest is also diluting their shares, it isn't a bad thing if you dilute their shares just to acquire good quality assets that will make you money, profitability, that will increase your EBITDA, your margins, everything. So yeah, this could be the ACB of the United States. So keep an eye on that. And yeah, that was a pretty good interview. He did mention more acquisitions, so keep a heads up on that, and also stay up to date with news. So let's take a look of their share structure. So they have a market cap of 642 million, which I believe this is outdated actually. So let's go on Yahoo Finance. Harvest Health. And statistics. Okay, their market cap is 716 million, and their share structure is that they have 667.58 million shares outstanding with a float of 942,000. Now, That's a low float. Like, and if you don't want to know, low float means like how many shares are traded out in the public. So like the lower amount of float, the easier it is to swing higher, like in any direction. So it can swing like 10% easily, like just because of its low float and low liquidity. And yeah, honestly, let's take a look at their technicals. So it has been like a buy for the past couple of days, and yeah, take a look over here. So the day before we got the news about the acquisition, it traded as low as $7.78. Now I got in at 8:45. So the reason why I went to 8:45 is because I look at the daily chart and I seen the most recent support that was like it was around this time, right? So I seen the support was like 8:45. So I bought in at 8:45 over here. It dipped lower, which I was kind of concerned like, oh, did it catch a falling knife? But luckily, we did get that news, which like brought me from bag holding to being profitable. I'm still holding on to my shares because this is just the beginning, guys. Like there's a ton of room to grow, especially when the US announces they're gonna federally legalize recreational marijuana. That's when you're gonna see the huge run-ups and big potential gains. So I'm holding on, I'm holding long. I don't plan on selling until like honestly 2020. Like I plan on holding these shares for at least a year. So yeah, we got the news over here on this day. So we open at 9:49 and the high of the day was 10:18. Like that's like what? 10, no, not even 10%, like 7, 8% bounce. So that's a really good swing trade if you guys are up to like day trading, swing trading. But keep in mind, low liquidity, so it's harder to get in and out positions, and the spreads, the bid and ask are like too far apart. So like if I were you, I would trade with a much smaller position than your regular like positions with the Canadian names because low liquidity means you could get trapped, which is a bad thing. So yeah. So yeah, they made a huge bounce. Their daily RSI went from like oversold to like in a neutral range, which is pretty good. And yeah, and I believe that in this interview, Harvest Health and Recreation does have 80% insider like ownership of their own stocks. So that's pretty good because like the inside people, like people who work for the company, like they're super confident about this company. So that's why they own a lot of like shares, insider shares. So please like keep in mind of that. It does signal that they're confident, and if they are confident in their own company, then chances are like other investors will be too. So yeah, if you want to take a look at this interview, I'll link in the description below. So yeah, that's all I have to say about Harvest Health. It's on my watch list, and like don't forget, if you like this video, like, comment, share, subscribe, hit the post notification bell, and I'll see you in the next video. Peace.